sports streaming continues to gain momentum, with Peacock, Disney, Fubo and DirecTV all part of the action this week. We review all the activity and what's ahead. Listen on.
Welcome to this week's edition of Inside the Stream. This is Will Richmond from Video News, and that was Colin Dixon there at the top from In-Screen Media as always. Hey Colin, how is everything this week?
It's great, Will. I'm still, would you believe I'm still struggling to get over my jet lag from my trip to London last week, but apart from being a bit sleepy, I'm doing great.
Yeah, I was going to say welcome back from London. So we have a lot on the podcast to discuss today, as you just mentioned in your overview. And I think you're going to kick us off with some updated data from Whirl.
I am, yes. Whirl actually released, I think this is the second edition of their CTV Trends report, and that came out on the 17th, I think. And there's a ton of interesting information that's there, and if you want a copy of this, you can just go to Whirl's website and pick up a copy of the whole report. But I wanted to focus on a couple of things in there that I thought were particularly interesting. First of all, they say that the ad load in fast linear seems to be pretty consistent at about 9 minutes. It fell a bit last quarter in Q3 and has gone up again in Q4. And is really, as I say, consistent at about 9 minutes, which is a great deal for viewers because that's considerably below broadcast and a lot below cable TV ad load levels. So that sort of illustrates the fact that fasts are, from that perspective at least, I think a better user experience. But actually, I wanted to focus on two things. One is that they show that ad fill rates have actually been down quite a lot in 2024. And in fact, they started to decline in January. And by February, they've basically been down between 15 and 19% all year, with one exception, which I'll get to in just a second. So yeah, this decline in fill rates, Will, seems to be synchronized with, rather suspiciously, I should say, with when Amazon added ads to Prime Video. I mean, basically they dumped, 80 or 90 million viewers into the ad pool in January. And I think that's really what's going on here. This was at the end of January, and as I say, Whirl shows a slight decline in ad fill rates in January, which just basically expanded to between 15 and 19% for the rest of the year. So I think there's a graphic illustration here of the impact of those 80, 90 million Prime Video viewers suddenly starting to watch ads. But I mentioned an exception, and the exception was in September, October, and November. Actually, in October, ad fill rates were slightly higher than in 2023. And I think this is from the election, and there was some data also in the market this week from Basis Technologies, which basically showed that connected TV's share of political advertising has really grown. It was 76% in 2024, which is a pretty big increase. So what they actually said was that video spending as a percentage of political ad investment was 76%. And they say basically that programmatic ad spending grew from 30% to 50%, and ad impressions grew from 11% to 24% from 2022. And I think what we're seeing in the world data with the ad fill rates is almost entirely due to the political spending world, since it's so well timed with sort of September, October and November. With the peak, you would expect the peak to be in October, right before the actual election in November. So anyway, that I thought was pretty interesting this week, and a nice tie-in between that Basis Technologies data and the New World data.
Yeah, I agree. All very relevant. And the World Report is available complimentary off of its website. There's some other interesting data in there, I think, as well, related to session lengths, which grew in the fourth quarter, but is not yet back to its mid-2023 level. And also related to hours of viewing, which looks like it'll bump up a little bit in Q1 25. And there's also some other great data in there too. So we encourage our listeners to have a look at World CTV Trends Report. Download that.
Yeah, indeed. And I'll include a link to, we'll both include a link to the Basis Technologies election spending data as well, because that's pretty interesting. But what caught your eye this week, Will?
Yeah, so this caught both of our eyes, got a lot of coverage. That this started with the information reporting, but got picked up in a lot of places that Apple is reportedly losing more than $1 billion per year on its Apple TV Plus streaming service. That's reported by the information. Apple's, again, reportedly spending about $5 billion a year on content. They have reduced that a little bit lately. Apple did not confirm or deny this report, but we've talked about Apple TV Plus many times in the podcast and how it fits in with their overall portfolio, services portfolio, what purpose it serves. But and clearly their content has been well received, a lot of awards and so forth, but at a cost for the company. I don't know. What's your take? I'm still a little bit uncertain what the future of Apple TV Plus is.
Yeah, me too, Will. Let's be clear. They're producing great content. They're really going. They said that they were going to go for quality, and I think they've really been delivering on that. They've been delivering a lot of really good shows. But with it losing so much money, I think the signs are that they're getting tired of this, Will, that they want better distribution. And this maybe is why they agreed to distribute Apple TV Plus through Amazon channels, which was a big surprise. I mean, who thought that Apple would do a deal through Amazon channels, with Amazon to resell Apple TV Plus? I certainly didn't. But, there's some new antenna data which actually suggests it's working out pretty well. They say that in December of 2024, the deal was struck and it became available in October. About 25% of new signups to Apple TV Plus came through Amazon channels. So I think they're trying to right the ship, Will. They're trying to generate more cash from that service, but leaving no stone unturned. But I don't know. How long will they continue to fund this if it continues to make a loss like that is a big question.
Yeah. Although $1 billion to Apple, just to keep things in context, is a drop in the bucket. But I think the larger point, as you're saying, is the strategic value of Apple TV Plus. Where does it fit in?
Yeah.
And they've been pretty circumspect on that point. Also, they've not really said a whole lot over the years.
No, they haven't. And I should say that antenna data just reminded me that we've got Jonathan Carson, who's been on the podcast a couple of times. We've been trying to get him to come in quarterly, and we're expecting to have him. We're not quite sure if it'll be next week's podcast or the week after, but check back, because Jonathan Carson from Antenna will be here to review their latest state of streaming reports. So there'll be lots of nuggets for you to chew on from that interview.
Absolutely. Hopefully next week, Jonathan, if not the following. But let's switch over to the topic that you touched on here at the top of the podcast. A bunch of news related to sports streaming, a topic we've covered in the past, and we're going to come back to it again this week with a number of different stories here, and you are going to get us started.
Yes, and the fallout from the RSN's collapsing market continues to is an ongoing thing. Will, definitely, and you've got a couple of stories related to that. I've got a couple as well, and one of the ones is that NBCU has invested in regional sports networks. They have 4 primary ones. And until now, they've really only been available if you had a pay TV subscription. Well, that is no more. You will be able to subscribe to NBCU Sports Boston, Philadelphia, Bay Area, and California through Peacock. And all you need to do is pay your subscription to Peacock, be a premium Peacock subscriber, and you will be able to subscribe to those 4 regional sports networks if you live in those areas. Now the price varies on depending on which one you have, so they're basically from $15 to $25 a month, but you'll be able to subscribe and watch the 24/7 live streamed channels as part of your subscription. So I mentioned that there were 4. NBC Sports Bay Area basically has the Giants, Golden State Warriors. There'll be some San Francisco 49ers content as well. NBCU Sports Boston includes the Celtics and some New England Patriot content, although not the live games. And NBC Sports California is the Athletics, the Sacramento Kings, San Jose Sharks. So there's quite a lot of content in there. And Philadelphia, NBC Sports Philadelphia, is the Phillies and the Philadelphia 76ers and the Philadelphia Flyers, NHL. So all of that you can enjoy with your subscription to Peacock if you are willing to pay the price. And I think this is a good evolution for the RSNs. Will, before you were being forced to pay for them with your pay TV subscription if you're in those regions. Now it's voluntary. Now if you want them, you can get them, and I guess that's why they're a little bit more expensive than they were in the pay TV package. But it's great that they're still available, and a good option, I think, for people if they want to get that content.
Yeah, I agree. I think for for cord cutters who, as you say, just still want to have that sports content, it's a smart move by Peacock. It's also, we'll talk in a moment, I think the value of sports to Peacock has continued to increase. So this is, it's only 4 markets in the country, obviously, so it's relatively limited, but still, I think a smart move by Peacock, broadening their base, continuing to broaden their base into sports. And also, the whole regional sports network market, as you talked about, has been in such flux recently that this certainly gives it another shot in the arm, brings more sports into streaming.
Yeah, it really does. But let's see, Disney is continuing to prep for the release of its main ESPN product, the ESPN online product that it's going to be releasing in the fall of this year, right?
Yeah, and report this week that they're moving closer, ESPN that is moving closer to potentially acquiring NFL media, which would certainly add more heft to the ESPN flagship launch later this year. NFL media includes NFL Red Zone. It includes, I think, 8 NFL Network game broadcasts and some fantasy football stuff, some other popular shows. And so, $2 billion is a big number, obviously, but NFL draws a lot of attention and could be a real anchor for the ESPN flagship app. So we'll wait and see if that deal actually goes through or not, but it sounds like it's getting some momentum.
Yeah, I think so too. And as you say, NFL continues to be a big driver. I think the jewel in that crown, Will, is the Red Zone. That seems to be extremely popular with football fans. And I think I could be wrong, but unless you have a pay TV subscription, and most of us don't have that now, looking at the data. The only other way to get it, I think, is with Sunday Ticket. I think Sunday Ticket includes NFL Red Zone, but that could be an awfully expensive way to get it if ESPN flagship is priced competitively. But I don't know, have they said how much flagship is going to cost? I can't remember if they've said.
I don't think so.
If they've said already. But this could be a more economic way of getting Red Zone if that's something that you're really into, assuming, of course, that it's available with the base subscription to whatever ESPN flagship is going to be. I think that's another good deal for sports fans. Boy, with each of those chinks that kept pay TV in people's homes is beginning to be removed, right?
Absolutely. We've covered that theme many times, and it continues to build. And speaking of, why don't you go on with the next story?
Yeah, and this is pretty interesting. This week, Comcast extended its license to the Olympics for basically now it has the Olympics through 2036, and that's both the winter and the summer Olympics. It has both through 2036. The extension cost it $3 billion, and I think this is actually a smart move for Peacock. They saw a lot of new signups because of the Olympics last year, and I think it's becoming synonymous with Peacock. I think people are really beginning to associate the Olympics with Peacock. And look, this is a really smart move, Will, because if there's one thing that the top SVODs are really struggling with right now, it's with differentiation. So I was looking at some hub data, and the hub data really shows that differentiation between the top services is really difficult to come by. Like Netflix does have fairly sharp differentiation, and if you look at differentiation by title, 58%, according to Hub, 58% of people were able to say, hey, the show Stranger Things, it's a Netflix show. But really, the others are really struggling. Like Game of Thrones, only 36% could say that was a Max show. Nearly 2/3 either couldn't connect it to Max or didn't know. And there were other shows as well, like White Lotus. Only 1 in 5 could correctly connect it to Max. And, the interesting thing is that they actually looked at a show from Peacock, which is The Day of the Jackal, just a very recently released show, received a lot of publicity. Get this, Will, only 10% of people could connect that show to Peacock. I know I couldn't. If you'd asked me which service it was on, I definitely wouldn't have known. And 22% connected it to the wrong service. So clearly drama, and there's not a lot of differentiation going on through standard TV fare. But one thing I think is probably working extremely well, and perhaps the reason why they ponied up the $3 billion is for the Olympics, is sports. I bet a lot of people would connect the Olympics with Peacock, and perhaps that's why Peacock and NBC decided to extend the Olympics out through 2036. So yeah, differentiation, tough to come by, but maybe sports is the answer.
Yeah, I think you're certainly right about sports, but even more particular, for Peacock to really become identified with the Olympics is great brand building for Peacock. And we talked about this last summer, that streaming is just such a great fit for the Olympics, because there's multiple events going on at the same time, and you have niche audiences for certain sports that, in the old days when there was just one linear TV channel, basically with, Olympics coverage, or even when there were half a dozen, there were a lot of Olympic sports that didn't really get any coverage. And streaming just completely revolutionizes the delivery of Olympics, all the various sports. And certainly both live and on demand. And Peacock, I think, is a great brand building opportunity for them, and smart move by Comcast to lock in through 2036 that Olympics franchise.
Yeah, and talking of red zone, I love that gold zone in Peacock. That was the best, really fantastic. But it's not only Peacock getting into the action, right? Fubo is too, right?
Yeah, so I think a couple of maybe smaller stories, but still noteworthy to round out our sports coverage this week. Fubo, which of course has always been known for its sports, picked up or added the new Texas Rangers regional sports network, Rangers Sports Network, part of a deal that'll have that added to the Fubo network starting this season. And so that's significant, obviously, for fans of the Rangers, and also helps to build Fubo's positioning in sports and sports streaming.
It does indeed. And one other one is that DirecTV is adding RSNs to its My Sports genre pack, which is available through DirecTV digital streaming. And we were trying to figure out if it's also available to DirecTV satellite customers, and it wasn't immediately clear, but I suspect it probably is. And what's actually happening here is that now you can get your RSN, if it is available through DirecTV, you can get your RSN as part of My Sports genre pack. And so that's basically 20 regional sports networks or team-specific channels from Major League Baseball, NBA, NHL, and my home team will include games from 37 professional teams. So it's a nice add-on. If you've got My Sports genre pack, you can add the My Home Team to that for $20 a month as an add-on. So that might be something, if you're a DirecTV subscriber, you might want to check that out and see if you can add that too.
Yes, indeed. And that's a lot of sports coverage for one podcast, isn't it?
It is. And what it really illustrates, I think, Will, is that sports have really made this leap into the digital domain. And now they're doing what they should do, which is maximizing the distribution. So they're looking at all of the possible distribution paths. And this is something that I think many providers in the digital space are doing too. They're now looking at fasts. They're looking at doing deals potentially even with traditional pay TV providers. They're really examining all those distribution paths and looking how they can maximize revenue through those, and it's no different for sports. And finally, digital is being treated on an equal, if not a preferred basis by those providers in the sports areas.
There you have it.
It is indeed. But I think that's probably enough for this week, and we'll hopefully we'll have Jonathan either next week or the following week. Jonathan Carson from Antenna.
Absolutely. Okay, Colin, great chatting with you, of course. And thanks, everybody, for listening in on this week's Inside Stream. And we'll see you all again next week.
Inside the Stream is a production of In-Screen Media and Video News. All rights reserved.